LiteFinance,
Hello, it's a Monday, November 27th, and it is time to start the market forecast for this week, which promises to be very interesting, since it is data heavy as some newspapers' headlines suggest. Okay, so let's begin. On Monday, there is not much to talk about, a couple of real estate data from the US only. On Tuesday, ECB consumer confidence will be worth watching, and on Wednesday, on the other hand, we will get RBNZ interest rate decision with monetary statement, CPI inflation data from Germany, and next one of the most important event of the week, which is US GDP data along with the crude oil inventories, and at the end of the day, a beige book. On Thursday, we will get Chinese manufacturing PMIs and a round of inflation data, CPI from the Eurozone and PCE from the US. Adding to this Canadian GDP data, it makes Thursday, I think, the most important day of the week, since on Friday, despite it will be the first Friday of the month, we will not get NFP data from the US. But it doesn't mean the Friday will be totally boring either, because we will get manufacturing data from key economies, including Eurozone, UK and the US. And also, Fed Powell is on the calendar, but it is a merely conversation with a college president, so it is not an important thing to watch. Okay, so now let's move on to fundamentals, where today we are discussing Euro USD, but with the focus on the Euro side of macro spectrum. So the head of the Bank of France, François Villeroy de Gallo, was the first among the chairmen of the world's leading central banks to find the courage to declare that interest rates will no longer be raised. Unless, of course, something extraordinary happens. His speech contradicts the latest minutes of the ECB meeting, where the Governing Council maintained the chances of resuming the monetary restriction cycle and called on policymakers to avoid undue weakening of financial conditions. There is a split in Europe. However, the Euro USD has already experienced this. According to the head of the Bank of Belgium, Pierre Vanche, market hopes for a reduction in borrowing costs by 100 basis points in 2024 are not only unfounded but also harmful. They may have the opposite effect, forcing the ECB, worried about weakening financial conditions, to tighten monetary policy. Commerzbank officials do not rule out such a scenario. Following the release of Eurozone PMI data, they said that investors hoping for a reduction in deposit rates would be disappointed due to still high inflation pressures caused by rising wages. Indeed, an ECB survey showed the wage growth acceleration from 4.4 to 4.7% in the third quarter. Purchasing managers also noted rising inflation pressures as costs in the labor-intensive services sector rose at their fastest pace since May. Overall, Eurozone data showed that the currency union continues to sink into stagflation. The PMI remained stuck below the critical level of 50 for the 6th month in a row, signaling a technical recession, while prices remain high. At the same time, Germany's data was strong, while France, on the contrary, was disappointing. It is not surprising that François Villeroy de Gallo announced the ending of the monetary restriction cycle, which has already brought many problems to his country. However, Germany has enough problems. According to Bloomberg, the budget crisis in the country could lead up to many infrastructure and environmental projects not receiving funding. As a result, GDP growth risks slowly by half a percentage point in 2024, and hopes for economic recovery will fade. So the situation for Euro USD bulls looks terrible after the victory of Eurosceptics in the parliamentary elections in the Netherlands, who plan to hold a referendum on the country's membership in the EU. It is difficult to have confidence in a currency that has a struggling economy and political squabbles behind it. However, the US dollar has unfavorable conditions too. When treasury yields fall and stock indices rise strongly, the greenback will have a hard time. It turns out that both currencies in the pair are feeling shaky, which increases the risk of a short-term consolidation in the range between 1.82 to 1.102. I recommend selling Euro USD when it rises towards its upper border and buying when it falls towards the lower border. And that would be all from my side. Thank you for watching, and till next week.